So in the live trading room, we periodically talk about the types of things that will help traders be successful. Our objective at Options Moneymaker and the purpose of hosting the live trading room is to give you an opportunity to follow along with trades, follow along with the type of thought process that we follow on our own trades, and hopefully put you in a position where you have a much better understanding, much stronger confidence level in terms of what you're doing on your own trades. So I go through my bar charts every day and assess what types of changes may be necessary to the pattern, to identify the pattern, and how that may influence my decisions to take trades. Now, I want to be very clear here. I make almost all, and I mean like 99% of all of my trade decisions, my actual choosing to enter a trade based on the 3 9-minute Able trend charts. The Able trend charts are some of the most consistently reliable trade signals that I've ever encountered, and I've been trading for over 30 years. But I've also learned over my trading experience never to weigh everything on one particular view. So that's my personal bias. And the members of my team, Michael, Allison, and Aaron, may have a different view, and that's okay. What I'm sharing with you is my view and the way I approach my trading. So I make my trade decisions based on the 3 9-minute Able trend charts, but I take a look at the 30 90-minute and get an understanding of where that is leading me, and then I take a look at my bar charts. My objective, and before I get into the specific bar chart analysis here, my objective is to take profits. That's what every trader's objective is. But you cannot be consistently profitable without managing your risk. And I've run into so many traders who said to me, I was doing very well, and then I ran into a bad period, or as Michael might describe, a bad row of stumps. I just wish I could wave a magic wand over everybody and give every trader the natural ability to manage risk. But it's something that you have to practice, and it's something you have to learn. Unless you know how to manage risk, unless you know how to make a decision on when to enter a trade, when to take a pass on a trade, even though it is so obvious that that's a great trade, unless you know how to do that, you're just not going to succeed long term. And one of the things that really weighs on me as an educator for traders learning how to trade is the stress that overextending your risk will cause for you. I don't like people to be stressed. I genuinely want people to enjoy their life. I want people to be at peace. I want people to feel comfortable and happy and joyful about what they're doing and have fun with it. You can't really have fun with trading if you have more capital at risk, more capital consuming the total value of your account that's tied up in positions that aren't playing nicely with the market. They're not playing out the way you wanted them to. That's going to cause you to be stressed. You're going to be tense. You're going to lose sleep. And it's also going to cause you to make decisions that are not appropriate. You're going to start making decisions based out of fear rather than confidence and knowledge that you have. So some of this, what I'm saying to those of you in our live trading room, it may sound elementary, but I'm saying it for the benefit of everybody who may think it's elementary, but then one day wakes up and realizes, oops, I've gotten myself into trouble. I'm also saying it for the benefit of people who are brand new and might not have quite that same level of experience. An excellent way to start trading, if you have no experience at all, which would be unusual if you're in the live trading room, but if you have no experience at all, is to trade virtually. just learn to get comfortable with your trades, learn to get comfortable with the patterns, learn to get comfortable with the way the market moves and how it influences the value of a position. Learn to get comfortable with one or two particular strategies and just hone your skills on those strategies. Second level of advancing your trading would be trade a single contract. Now, immediately there will be people who will say, "Oh, but the transaction costs are too great." I I will tell you that for the first 6 months of your trading, you shouldn't even be concerned about making money. You should be concerned about learning. And if you don't lose any money during that 6 month period, then you have a huge win. So that's my second point. And then the third point is trade conservatively, trade cautiously, look for small wins. Now, Michael is really a master at what we frequently refer to as base hits. Michael will take $100, $200, $300 profit out of a trade, take his capital back. It's almost like he's then standing on the sidelines, throwing the ball in his glove and waiting to decide where he wants to throw it next. But he's going to constantly recycle the same capital over and over again. It's something that I do. It's something everyone on our team does. And it's why you can generate phenomenal returns in trading options just based on the recycle of that same capital over and over again. If each time you put that capital in, you take that capital back plus an extra, let's say, $300 after fees and commissions, then you do that again, then you do that again. Each time you're taking back more than you put in, then you can be very successful. So it's just kind of what's been top of mind for me today, because I have a very passionate desire for people to succeed with their trading, to be successful with it, and to live comfortably, have a lifestyle freedom. I mean, Michael's a great example. He's not trading from his home office today. He's trading from a place that he and his wife enjoy visiting. My wife and I, we love to travel. We love to go different places, and I can work from anywhere. I can trade from anywhere. So there's a lifestyle freedom that comes with this type of trading, and you don't want to suppress the benefit and the gratitude for that lifestyle freedom with stress and the burden of having to worry about your trades. So I just kind of wanted to share that because we've had a lot of new people joining us in the live trading room recently. We have a lot of people that follow along with what we're doing, and sometimes it can be a little overwhelming and intimidating on how should I actually start. I've read all the books, I've attended all the webinars, I've done all this study. It's Monday morning and the market just opened and I'm like a deer in the headlights. What do I do? Where do I start? How do I do this successfully and don't get myself into trouble? So I just wanted to share that with you. So let me set that aside now and take a look at the charts. Last few days, we've been talking about the NDX chart in particular, and we've been tracking the pattern. This red line right here, just as a reminder, goes back up to a 2-year view. You can see here how that red channel line has been in place for quite some time. This channel's actually been active since early September, if you include the lows. The first definition of this channel was at the end of September, and the first definition of the high, the resistance, was in early November. We've been trading along that declining level of resistance now for several days. And within that channel, I'm going to go to a 10-day, 10-minute chart, we can see that we've also been trading within a cycle that has been declining. So what happened here is we've been tracking this channel right here, this cycle right here, up until today. And today at market open, we had a pretty significant sell-off, and it caused us to drop well below where we had previously defined support. Well, that's going to happen. And one of the responsibilities you have as a trader is to just kind of measure the activity and redefine each day what the range of movement is. And what I saw this morning is it did not, that move lower below support did not at all change the slope of the declining pattern that we saw. My level of resistance stayed exactly where it had been previously defined based on these natural levels of resistance. But what happened is we just naturally widened the range of movement. We have a 58-point range between support and resistance right now on NDX. And it was defined that way because when we moved lower, we came right down to a natural level of support. So that's something that you want to measure. Natural level of support was defined because we moved down to a low. All the lows previous to it were higher, and all the lows after it were higher. Now, I don't know where we're going to go from here. I don't know if we're going to move back lower or if we're going to trend back higher, back up to resistance. I don't know, and I'm not trying to predict that. What I am trying to do is to understand what the range is, and understanding where we are within that range currently is going to influence my eagerness for a new trade based on the Able Trend signal. So right now, if Able Trend signals a buy signal to take a long position, and I see that we're just coming off of a Bollinger Band snap, and we're trading at the bottom of what appears to be a very short-term rising cycle, I may jump into that trade. I am probably going to wait for full confirmation, but there's some potential room to move to the upside, maybe up to around the 44.86 level, which would be about 15 points higher. That would be enough for us to do a day trade. It would be enough for us to leg into a trade. And so I now understand what I might be willing to do in terms of a buy signal. If I saw a sell signal come on the chart, I want to feel confident that that sell signal has confirmed, because we moved down so significantly this morning at the open. And oftentimes what happens on those big moves down, as you can see back here, is there's a retracement of that movement back to the upside. So I'm going to be cautious on any signal that I see alerted. I am not going to be averse to taking those signals and getting into the trade, but I am going to be cautious. And when I say cautious, those of you in the live trading room who have attended our Profit Accelerator program, where we teach you exactly what strategies we're using in the trading room, you'll understand that the difference between being conservative on the entry versus being a bit more aggressive is, if I'm conservative, Able Trend is going to give me a sell signal or a buy signal, and then Able Trend is going to confirm that signal. And if I wait for confirmation, that's the most conservative entry into that position. A more aggressive entry would be, I see a buy or a sell signal, and I don't necessarily wait for confirmation, but just kind of my interpretation of all factors in play tells me I'm willing to get into that trade. And that trade might not work out. I enter every trade knowing it might not work out, which is why we talk so much about management of positions and adjustment of positions. You have to know what your out is before you get into the position. You can't get into the position and then decide later on what you want to do in terms of managing it when you may not be confident in managing that trade. Let me take a look at SPX here real quick. Now, I haven't adjusted SPX's channel yet. The channel that I have showing right here is based on yesterday's interpretation, where we had a series of lows and we had two natural levels of highs identifying resistance. So I'm going to do an adjustment on this, and let's see how this works out. I'm going to start just by dragging support down to the natural level of support that was formed this morning. So for my interpretation, what has happened is nothing has changed about the pattern other than the pattern has widened. The distance between support and resistance has widened, and that has a also reasonable correlation to the Bollinger Bands, the way they splayed out. So we bounced off of support, this newly defined support this morning. We moved a bit higher. There is a short-term, very short-term cycle going on here. Let me just see here, where we had one low and we have a second low, but that second low has not confirmed yet. I need it to confirm by moving higher. If we continue to move lower, then this cycle is not valid at all. So I won't say that that's valid yet, but this declining channel right here is valid because resistance was already previously defined, and this morning we had a natural level of support that defined it. And we don't talk about RUT as much on these updates, but let me just take a quick look at RUT. We've got quite a few patterns going on here. I don't really pay as much attention to RUT, but I know some of you do. So here, let me just kind of see where we are here. I'm going to do this in real time, and you can choose to agree or disagree with my interpretation, which, by the way, is an important point. If you trade with a partner, if you trade with somebody that you like to spend time with, it doesn't necessarily mean that you guys are going to agree on what the pattern should look like. Myself and my team will frequently compare notes on our pattern interpretation, and that doesn't mean that we are exactly spot on in agreement, which is okay. Your trading has to be based on what you like, what you think the pattern is. So what I just did was I slightly altered this rising channel, came across this whole set of resistance points here, and captured this one low. Now that kind of bothers me that there's only one low defining this rising pattern, but I feel strongly that resistance is well defined because of the number of price points that we have along the top here, and we moved up close to that high. All of this was originally sitting inside of a longer term declining channel, and I'm going to adjust that right now and reinterpret that. And all I did was I altered the angle of the channel so that I could incorporate the latest natural level of resistance, and able to do that because we really only have one level of support, very close to two levels of support, defining support. So my interpretation is that we do still see RUT in a declining channel. This declining channel started back in June of last year, so a year ago, and we moved up to that declining level of resistance this week, 2 days ago, and fell off of it after that. So the next thing I would be looking for is, do we move higher and break above this resistance, or do we end up moving lower and either break below this rising support or confirm this rising support? So that's my interpretation of three indexes. I hope that's helpful to you. Please, when you're trading, spend your time learning. Spend your time, first of all, focused on learning and understanding what you're doing. Spend your time after that focused on earning money. In the long run, if you devote your time to learning and educating yourself, you will make money, more than likely. If you come to options trading and say, you know, geez, I want to replace my income in my job in the next 2 weeks, well, more than likely you're not going to be successful because you don't have enough experience. But if you're patient and you're diligent and you apply the skills that you're learning through the programs that we teach, as well as on a day-to-day basis, the discussions that myself and my team have in the live trading room, there's a lot that you can learn, and you can start to find your own stride in terms of being successful as a trader. So I hope that's helpful to you. And as always, I appreciate you guys being here in the live trading room.